Good afternoon, everybody. Welcome back to Bravo Tango Trading. Today we're going to be discussing backtest. Before we do, quick disclaimer: I'm by no means a financial professional. I don't come from that industry. I'm simply a dude with an idea. So most of this is for entertainment purposes. If it's educational, cool. But do your own research. Do your own due diligence before you place any trades. And especially with backtests, past performance does not indicate future performance. So keep that in mind. Take all of this with a grain of salt. But today we're going to be going over high level just how to use the backtest part of the website. There will be subsequent videos that delve a little bit deeper into each of the different backtests. So today we're talking about Google. For this demo, I'm specifically using the Bollinger Band score. The direction, you can backtest long and short, but for this, we're going long. We're only looking at 1 year. So for this one, we're looking back 7 days, and we're taking 2 standard deviations of the volatility that we've seen over the last 7 days. We're specifically buying when the Bollinger Band score goes above, we're selling when it goes above 90. We're buying when it goes below 37. So here you can see the candlestick. You can see how the scores move around with the price action. Down here you can see the actual score itself and how it bounces along above the 80-90 percentile, down below the 20-10 percentile. When it's high, indicates overbought periods. When it's low, indicating oversold periods and possibly a opportunity to enter a position. So there's no denying it's March 30th today. So tech in general has had a pretty strong run over the last year, given the 2022 pullback, and the market as a whole has had a super strong first quarter of 2024. But with this specific set of parameters, we can see that while buy and hold would have yielded us a 48% return, by jumping in and out a little bit, we can avoid some of those some of the deeper pullbacks, and we can still catch a lot of the upward momentum. So we can return. In this specific example, we returned closer to 68% return relative to buy and hold being 48%. When you get down a little bit farther, we get the actual details of the results. So you can see what is the average price of Google, what was the average low, high, close, what is the Bollinger Band score. Quick FYI here, so whenever we get the signal to buy or sell, the actual trade happens. So we get the signal here, but technically it's the result of the price action from the day before. So we get the signal and action on it here, but we're looking at the row above to determine when that happened, and then we action on it the next day. And then for buying, we're specifically calculating just what was the average between the high and the low. I don't want to cherry pick and say that we got in at the most opportune time. Just take the average and do the math from there. So we can see how did this test perform. We can see what is our backtest cash, how many shares do we have, what's the balance of the shares that we have, what's the total backtest account value. And we also compare that against the buy and hold. So buy and hold, it takes the starting value, buys a bunch of shares, and that's the same number of shares that you have the entire period. And then as we go through the year, you can see how did buy and hold do relative to how did our backtest do. If you want to make it bigger, you can expand it. If you want to, you can click in Control A to select everything, copy. If you want to paste it into Excel and do your own analysis, check some of the math, you're certainly welcome to do that. But at a super high level, this is how the backtest is intended to operate. So you set your parameters for how do you want to actually configure the Bollinger Band score or the RSI or the stochastics or whatever, and then there's a section for what is the trigger for when you actually enter and exit a position. So for most of them, it's buying when it's below a certain score, selling when it's above a certain score. Moving average is pretty straightforward. You buy or sell as the moving averages cross over. MACD, you can enter or exit based on the MACD or based on the action of the MACD versus the signal line. But that'll all be evident, and like I said, future videos will delve a little bit deeper into all of the different back tests. We also give you Monte Carlo. While Monte Carlo isn't a back test per se, it's still kind of interesting to look out. So we'll dig a little bit deeper into that in future videos. But for now, that is backtests at a very high level. So thank you for joining us. Have a great day. Best of luck. Happy trading.